Today we'll be taking a look at ASX listed stock Critical Resources. The ticker on the ASX is CRR. We're going to have a fundamental overview of what's occurred over the past few months, including their latest announcement, and then perform a price analysis in order to make some predictions on where we can expect to see Critical Resources go in the near future. Let's take a look. How's it going, guys? Ryan here and welcome back to another ASX analysis video. Today we're taking a look at Critical Resources, or CRR on the ASX as they're known. This is a company we have looked at in the past, but they've just had a major announcement which made me want to revisit this stock in particular. That announcement is a maiden resource, and of course this is a lithium company once again, and they are certainly a new entrant to the market that I think will have an impact at some point in time. So, as with many of our stocks we like to take a look at, I want to identify these ones for you guys earlier on so that you can decide whether or not it's a good investment for you, and down the line maybe you will reap the rewards from these type of stocks as well. So, first things first, we're going to have a look at their maiden resource. Let's dive in. Critical Resources' maiden resource was out of their project in Ontario, Canada, the Mavis Lake Lithium Project. What they've produced is basically 11 months worth of drilling data that has allowed for a resource of 8 million tonnes at 1.07% lithium oxide. This is a fantastic number for their maiden resource, but of course with all things like this, it's only inferred at this point of time, but is of course JORC compliant. Now there is multiple other drilling operations going on at Mavis Lake as we speak, and their intention is to basically expand that resource, expand the amount of lithium they have, and of course hopefully as well increase the grade over time. So what we're going to see is hopefully some more results continue to come out for this company and the project in particular that will help drive the value of this stock upwards. Now, why do I think you should check out this project and of course CRR in general? Well, they have a few things going for them which are very significant. The first of which is they are only 10 minutes away from required infrastructure. That means in order to get the site up and running, hooked up, get transport means, all that sort of stuff is going to cost significantly less than if we were in a rural or a remote area. Secondly as well, Canada is a tier 1 mining jurisdiction, which means it's going to be relatively easy for Critical Resources to get their project off the ground as long as they obtain the necessary support. And one thing they do have is a great relationship with the First Nations people of Canada. So we're going to hopefully see that this relationship allows them to propel themselves into a producing state, of course, down the line in a few years' time. Finally as well, we have a experienced set of managers, including the managing director with mining and project development experience. It is critical that we have these sorts of people at the helm of a project, because if we don't and we've got relatively green or new people, then they're not going to be able to propel the company and get through the process as easily or smoothly as other people. The best thing about having experienced management people in place with the history of getting these sort of projects off the ground is they've done it before, they know where the pitfalls are actually going to be, and they can try and avoid them and try and reduce costs as they have learnt their lessons from the past. As of right now, Critical Resources is sitting at a market cap of roughly $70 million. Now, whilst this is still a very small company, they are experiencing, of course, all the effects that come with that, including right now funding. And in my opinion, that is probably the one thing that I'm hesitant with this company at the moment. The funding is only lasting for another quarter or two, which means a raise is going to be necessary. Now, of course, everyone knows that raises are important and are needed for companies of this sort of scale, in particular mining exploration stocks. So it's not all bad news, it is expected, but typically when we see a raise come, we do see a dilution in the value of the share price. That's probably the one thing I am hesitant about at this point in time. But now let's take a look at the chart, perform some technical analysis, and make some predictions on where we can expect to see critical resources go in the near future. Welcome into the critical resources chart, guys. As you can see right now, we are sitting at a value of 4.3 cents, and unfortunately straight off the bat you'll notice that we've been in a bit of a decline for some time. In fact, the decline has been since the 21st of January 2022, so well over a year of a decline now. And I'm going to put in place immediately what is our basically resistance point, and that resistance point in fact has actually only just been broken in the past few days, but has also been tested, as you can see over here. We did shoot up significantly to a high on the 5th of May, and that high was a value of 5.8 cents. So a decent little increase there, but unfortunately a gap had formed itself. As you can see, the price comes down to close it, and it looks like we've managed to actually bounce back and stay above, as of today, that key point that is now acting as our support, which was of course the previous trend line in place. So right now sitting at about 4.3, hovering just above straight away that 50-day moving average at 4.2, which is our major point of support at this point in time. Key target straight off the bat would be this 200-day moving average. Closing above that for a few days consecutively would be the short-term goal in my opinion. That's sitting at 5 cents right now. So a decent, roughly about maybe I suppose 40% jump from where we're currently sitting at. So it will be relatively decent. Now, as well as what we have seen, there are a few other factors to consider. First and foremost, our main horizontal point of support is sitting just down here at 3.5 cents. Now that is a point we really do not want to hit and test, and hopefully with this line just back up here that is acting as our support point, we won't have to test that. Now, as we do tend to move across and upwards as well, we do get more horizontal points of resistance. In fact, there is one sitting just about here at 5.4 cents. It's been a major point of resistance, breakouts, breakdowns, and tons of price action historically. We did try and get above that point, but could not close above it, as you can see over here back on the 5th of May when it did shoot up. So that 5 to 5.4 cent range is going to be very, very important in the coming few weeks when it comes to the price action of this stock. Now, one thing on the moving averages I'd like to note is that hopefully with a bit of an uptick, we will see that blue 20-day moving average cross above the 50-day moving average, indicating a reversal in the overall trend. I'm also hoping to see some green days with bigger volume. You can see on that red day, looks like a lot of traders got in and took profit. This was the day that that announcement really hit home and came out, and we saw the mineral resource be released, or the maiden resource rather, by CRR. Now, let's take a look at a few more indicators. First and foremost, let's look at the RSI. You can see we did hit an overbought range, and we did of course come back down the following day, a maximum over here of 74.91 above the 70 mark where we want to stay below, but we came down quick and we are hovering only now at 51.28, so not doing too shabby. There is room for us to now move back in an upwards direction. Let's as well take a look at the MACD. And the MACD is looking pretty good. It hasn't gone nuts, but what we're seeing is the lines at this point in time were looking like they were going to cross downwards, but we have seen a bit of a flatten out occur of the 12-day and the 26-day EMA moving parallel to each other. Now, what we need to see is for that rejection of the 12-day EMA on the 26-day EMA and a movement upwards from that blue line right there. That will then be supported hopefully by that volume, as I did mention. Now, right now, things at this point in time are looking relatively good compared to where they were. Even though we have had higher prices previously, we were stuck well and truly in a downtrend for a long period of time. Now that we've managed to break out from that downtrend and get out of it consecutively for basically about a week now, with the exception of a few little dips over here, we are likely to see an uptick in the overall value, or at least some sideways movement and consolidation as we move into the future. But as I've already mentioned, I think the best target right now for us is, of course, that 5 cent mark, the 200-day moving average at this point in time. Closing above that consecutively, then getting back above the 5.4 cent mark is going to be very, very important moving into the future if we want to see an increase in the value of this stock. That wraps up today's analysis of critical resources, guys. I hope you enjoyed today's video. I'd love to hear your thoughts down in the comments section below on where you think critical resources will go within the next 12 months. Of course, make sure you hit that like button, subscribe if you want to see more of this sort of content, and hit the bell notification so you're notified when new content is released. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.